Hey everyone, it's Matt. In today's video, we'll be discussing the psychological aspect of trading a bit more. And so today's topic will revolve around greed, or being a greedy trader. And for those of you that haven't watched the last part where we discussed fear, I'll link that down in the description of this video. And if at any point in time you find this content helpful and you'd like to see more videos like this in the future, be sure to drop a like on this one and subscribe to the channel. So when it comes to the emotion of greed, which is different for every single person, this primarily ties into how we react to money, or in the world of trading, how we react to having won some trades, or how we react to a trade that's currently in profit. Now, I'm not saying that money and wanting money is a bad thing, or wanting profits as a trader is a bad thing. This is obviously why we become traders, but there's a difference between being satisfied after you have won a trade and have made X amount of money versus not being satisfied despite having made some profits or being up in profit. So what are some reasons as to why a trader might be feeling greedy? Well, let's discuss this next. So the first reason why someone might be greedy when it comes to trading is having some unrealistic expectations when it comes to their profits. So maybe they were led to believe that they can make an X amount of money per day consistently. So maybe they have a certain goal in their mind where they feel as though they need to make $100 per day. And so this is something that lingers inside of their head. And this is one reason as to why they might be greedy. And so this is also where some traders will feel like they need to rush when it comes to the profits that they're making. So maybe they're making 5% per week or maybe 2% per week, but they feel like that's not good enough. And so they feel as though they need to make even more. Or maybe they read something or heard something from someone online that told them that they can become a multi-millionaire within 30 days. So now they have a reason to rush when it comes to making some profits because they feel as though there's a certain deadline that's realistic, even though in many cases this is very unrealistic. Or maybe they're currently in a trade that's in a lot of profit, and even though their gut feeling is telling them that they should probably close this trade because there might be a reversal, they keep holding on to it because they plan to catch the entire move. They only want to exit at the absolute top or at the absolute bottom and not a dollar less. Now, the second point is feeling like you have something to prove. So maybe you might have promised to your friends or to your family members that you can guarantee that you will make $100 consistently per day, or that you made a bet with a friend that by the end of the month, you will have made at least $1,000 in profit. Or maybe this has nothing to do with proving something to someone else, but it might have to do with proving something to yourself. And so this is where your ego can be tied to trading, where you feel as though the market owes you something and that you're owed a certain amount of money within a certain amount of time. And so this is where this usually might tie into wanting to beat a certain personal record. And so let's say that last month you were up 10% for your trading account. And so now you set a goal that you need to make 11%. Or maybe you're in a trade where you're up $480, but in this case you want to hit the $500 mark. So it doesn't matter if the market is telling you that it's likely going to reverse. You're holding on to your trade because you want to hit this lovely round number of $500. Now, for the third point, when it comes to being a greedy trader, this might tie into revenge trading or wanting to make up for the past. And revenge trading typically ties into wanting to make up for the past. So let's say, for example, that last week you took 10 trades and they were all losses. And so now you might feel pretty disappointed with this. And so this week you told yourself that you're going to make up for the past. So you will guarantee that you're not going to have another losing week. And so if you took 10 trades, this is where you might start forcing in 20 trades or even 30 trades. And so this is where you might even be in a trade that's currently sitting in profits. And normally you would close this type of trade, but you're not satisfied yet because of last week's losing streak. So this is where you might feel forced in order to make up for the past. So you might even go against your trading plan. And so now let's move on to the fourth point, which is where you react impulsively in the moment. And surprisingly, this is something that a lot of people might not be aware of until it's too late. And so this is where you might be in a trade where originally you were looking to close this trade at the $10 mark, but you see that the market is incredibly volatile. So you might see 3 or 4 bullish candles in a row, and all of a sudden you start to feel excited and you get the feeling of euphoria, and you feel as though you're essentially unstoppable because you see your profits continuously go up. And so this is where you might tell yourself, okay, forget about $10. I'm gonna put my take profit now at the $15 mark. And so now the market might move up to your original take profit point of $10, but you continue pushing back your take profit target because you feel in the moment as though you haven't had enough. And now let's move on to the fifth point, which involves not having a take profit plan. And so let's say a trader is currently in a trade that's up in profit and they're up $400, but they don't know whether or not they should close it because they never had a take profit plan. And what was $400 slowly turns into $450. And so they tell themselves, okay, well, what's the point of closing this trade? If it continues going up in profit, let's continue holding on to it forever. And so this is where a lot of traders are essentially winging their take profit targets. So they don't have any sort of trading plan that they're following. They're basically winging their take profits, meaning that they close their trades based on how they're feeling or based on what a number sounds like. So they might be sitting $500 in profit, but they feel as though $600 sounds a bit better. And so now let's go over some potential solutions for all 5 of these points. For the first point, when it comes to having unrealistic expectations with your profits, obviously we need to turn unrealistic into realistic, which means that if you expect to make $1,000 consistently per day, understand that this is probably not going to happen every single day. Probability plays a role in this, or what the market is like for any given day might change the market conditions. It's also important to not rush the process of becoming a trader, especially if you're a beginner, as well as not rushing the process of needing to make a certain amount of money by a certain time period. And so this is where being patient is incredibly important. And the reason why patience is important is because the opposite of patience, which is impatient or being in a rush, will typically coincide with making certain trading mistakes. And one of them is greed. So you'll be in a rush to make certain profits, and therefore you won't follow your trading plan and you will start making a lot of mistakes. And understand that when it comes to trying to catch the entirety of every move, this is not something that is realistic in the long term. So even if you got lucky once where you managed to get the perfect entry at the bottom of a trend, and the market played out and you managed to exit at the absolute top. So even if this happened once, this is not something that is going to replicate itself over and over again. And so wanting to catch the entire move of any given trend is essentially impossible. So it's better to think of this as like a slice of cake, of where we don't need to eat the entire cake in order to be full. So if the market's in a trend and we can think of the trend as being the entire cake, instead of trying to call the absolute top or getting out at the absolute bottom, aim to only get a slice or two of the entire cake, which will typically give you your profits so that you're satisfied and you won't be greedy. Because otherwise, if you continuously hold on to a trade within a trend, there are many times where the trend will reverse quite quickly, and at this point you will regret not having taken your profits earlier. For the second point, when it comes to having something to prove, understand that you shouldn't trade to prove something to anyone else, because one, it's going to give you even more pressure to trying to make X amount of money within a certain period of time. Or if you're trading in order to fuel your ego, understand that this is typically a long-term recipe for disaster, because at this point you can't think objectively. And so if you're in a trade that's in profit, but the market is telling you that it's likely going to reverse, so you might get certain confirmations based on your trading plan that you feel as though it's going to reverse, but you feel that This is going to negate a certain goal that you had set for the day, and you know that you'll feel bad about yourself having to close this trade instead of holding on to it. Well, then you might continue holding on to it in order to feel better about yourself. But this is where the market might turn around, and that's where you'll have some regret. And another point, which is pretty harsh, but it's the truth, and that's that the markets don't care about how you feel. So you might feel as though the markets might owe you something. So you'll feel as though it owes you a certain amount of profit, or you might be sitting $470 in profit and you want to hit the $500 mark. Well, again, the market, whatever you're trading, it doesn't care that you want to hit $500 for the day. The markets will do what they do. So instead of setting these round dollar marks that need to be hit for every single trade, again, the markets don't care. The markets do what they do, and the only thing that we can control is how we react to what's presented in front of us. And for the next point, which is pretty simple, which is don't dwell on the past and don't try to make up for the past by revenge trading or by trying to force in bad trades. So don't try to force in bad trades. And so just because the previous week you had a losing streak, or maybe the previous month you had a losing month, that doesn't mean that you need to force the current week or force a single trade into making up for the entire past. Now, for the fourth point, when it comes to reacting impulsively in the moment, so maybe in the past when you're in a trade and your trade is in profit and you told yourself that you should close your trade and exit with a winning position, you keep holding on to it, and this is where your trade goes against you. And so one thing that can help a lot of people, in my opinion, is to monitor your feelings and to monitor how you react to different market conditions. So if the market is approaching your take profit target and it's incredibly volatile and you see a bunch of bullish candles in a row, or maybe a bunch of bearish candles in a row if you're selling, and in the past, this is where you ended up pushing back your take profit point, and this is where you ended up feeling incredibly greedy. Well, then by tracking these moments of when or where this typically occurs, this will help guide you so that in the future, if you are in a trade that's up in profits and you have similar signs appearing in the markets, well, then you know at this point that you should stick to the plan. So you should follow your trading plan to a T, and you shouldn't worry about how you're feeling. So understand that having a trading plan is there to guide you in the long run, and there's a reason why you had these rules set. So in the moment, if you're feeling euphoric or you feel unstoppable and you know that you should close your trade, well, then simply follow your rules instead of going based on your emotions. And this is where you will thank yourself later. Okay, let's move on to the last point, which is when you don't have a take profit plan. So if you don't have a take profit plan, then this is something that's important to have, because otherwise you're going to resort to greedy trading. So if you don't know where you plan on closing your trade, well, then you're never going to plan on closing your trade. And then this is where you have this endless cycle of where you're in profit and then your trade goes against you. And then you have regret later on that you didn't close your trade when you should have closed it before. And so if you do have a take profit plan, remember to plan this before entering your trade. So similar to how someone would have a stop loss plan, so a level where they plan to exit their trade if their trade goes against them. So that way, if they encounter a probable loss, it's not a surprise that they lost X amount of money because they already planned for it before. So similar to this, you should do this with a take profit target. So that way you know your risk to reward ratio, as well as where you should close your trade if your trade ends up going in your favor. Now, again, I'm not saying to set unrealistic take profit targets, so they need to be realistic, but this is where you can base your take profit plan based on what you've back tested. And for those that want to learn a bit more, I've made a video about this in the past, so be sure to check that out. But one thing that I will quickly bring up from that video is the concept of partial profits. So this does depend on your broker, but if you have the option of closing partial positions to your trade, so maybe you might have one take profit point and then a second take profit point and then a third take profit point, This might help you reduce the feelings of greed of where your first take profit point will close off, let's say 60% of your trade, and then the remainder will get closed off at your second or your third take profit point. So I hope this helped. Let me know if you'd like a part 3 for these trading psychology related videos. And if you found this one helpful, then be sure to drop a like. And as a reminder, the link to my trading community is down in the description of this video, so be sure to check that out. Thanks for watching. I'll see you in the next video.